Good afternoon, guys. It's Workin bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar 4-hour chart on Coinbase. And when last we spoke, actually, let me zoom in here, guys. When we spoke last, guys, Bitcoin was operating within kind of this falling wedge. I did tell you that was a bullish pattern. I was looking for a bounce somewhere around the 99.50 to about 10,100. I did tell you anywhere in this area to expect a bounce right in here, and that's exactly what did happen. Price came down here, actually did have one decent bounce, rejected, kind of faked everybody out, came back down for a lower, actually wicked right below down to about 9,900, but again, just by a wick. This is why we don't go by a traditional, just a break. We go by a confirmed break. In other words, in this case, it would have been a 4-hour open and close. Now, I oftentimes use much smaller time frames, maybe an hour open and close, something like that, but for our purposes, a 4-hour open and close would have kept you, would have kept you on the right side of this trade. And then, of course, we did end up bouncing above, and of course, it does look like that descending triangle is starting to play out. Now, as I said as I said on my last update, which was, I believe, 2 days ago, I said that a measured move off of this thing would bring us up to somewhere around 10,500 to 10,650, somewhere around this our area of known resistance right here at 10,650, maybe just a little bit below that. But I also said that if you're trading this, I'd be very, very conservative. In other words, I told you I would get out of this trade somewhere around 10,350. So I think I said somewhere between 10,300 and 10,400, somewhere in there. And that's exactly where Bitcoin as of right now is bounced. It bounced up to about 10,370. I got out at 10,350. As I told you guys last time, I did have buy orders sitting down here laddered between about 10,050 and 9,950. Of course, those all got filled, and I went ahead and got out at 10,350. So that trade is closed in my opinion. That was a very, very decent trade, very decent trading opportunity. If you did take that trade, that's wonderful. We talked about it on the last thing, but I would not get greedy here. Yes, it does look like there's a good chance this thing comes back up and tests at least the descending resistance line of the overall descending triangle that we are in now, which would have us somewhere around, again, 10,600, 10,500-ish, somewhere thereabouts. It does look like there's a good chance it comes up there, if not test, 10,650, our known area of resistance. But it doesn't mean it has to, and Bitcoin is certainly has become infamous for, especially over the last couple of months, for faking everybody out. There's a lot of manipulation going on. So again, guys, this is why I said on the last video, if you are going to take this trade, don't get greedy. Now, I'm not a financial advisor, This is not financial advice. I'm just kind of telling you what I'm doing, and you, of course, have to make your own decision. Now, also, as we discussed last time, there are two ways you can draw this. I'm personally looking at the, I'm going to zoom out here to the daily. Looking at the overall structure of this, guys, I do think that this descending triangle is, in my opinion, I'm leaning towards drawing it off of the more of a purist form, as I discussed last time. So coming from the ultimate high of this wick of this formation and then following it straight down, which again puts us at the apex of this descending triangle, if in fact this is the case, basically puts us already right within that apex. In other words, we could see a breakout within the next week or two. I do think there's a good chance that this is in fact the correct way to look at this. And the volume signature actually does back that up. If I come over here, guys, and we just look at the overall volume signature, it's getting squeezed tighter and tighter within a range, we can see that the apex of that volume signature basically comes in line with exactly the apex of this descending triangle that we just talked about. I mean, almost perfectly. So that's really, really difficult to ignore. I know a lot of people are still drawing this, and I understand why, because this is, I believed, until we had this rejection right here, I believed the very likely the correct way to draw this was something like this. And if this is in fact the case, if I get rid of this, let me just get rid of this briefly. There we go. If this is in fact the case, of course, we very likely may come up here, test 11,000, 11,050, and then reject a little bit higher, and then just maintain this overall sideways movement within this overall descending triangle that basically won't come to an apex until about the end of October, beginning of November, somewhere thereabouts. But that just doesn't line up with the volume signature at all. It doesn't have to. Volume signature is just one thing. Of course, this could absolutely be the accurate way to draw this, guys, and I think we'll find out soon enough. And certainly, if we do break above 10,650 and then it rejects right around 11,050, or at this would be descending the top of the descending triangle in this scenario, then of course I will have been wrong, and this will have been the correct way to draw that. But until that does happen, guys, I still think there's a very, very good chance that we're looking at something like this. The volume signature just plays out, and as of right now, the price rejecting right at the top of that descending triangle just seems to make the most sense right here. Now again, I could be completely wrong on that, guys. I'm not telling you that this is 100% the case. I'm not ready to to die on that hill just yet. I'm just saying, for me, this is what I'm leaning towards until until price proves otherwise. So that being said, just as we discussed last time, if we break above if we get above 10,650 decisively, a 4-hour open and close above 10,650, I will look at that as a potential breakout of this. And of course, I'll be looking to break this 11,050, which will solidify that this is in fact the correct way to draw it. And then of course, the next major area we'll be looking at is 11,500. And as we discussed about on the last video, I'm not going to go over it again. 11,500 is a very, very pivotal zone. We need to see at least a 4-hour open and close above 11,500 or a weekly close above 11,500. And really, we need to see a weekly close above 11,500. I'm going to revise that. We need to see a weekly close above 11,500, and we need to see a 4-hour open and close above 12,000. If either of those two happen, doesn't matter which one happens first. Regardless, if one of those two things happen, regardless of which one happens first, then I'll be looking for continuation to the upside, and that's when we're looking at this $13,800 high, 14,000 somewhere in that neighborhood, and then of course if that gets taken out, we're looking at that $16,100 target. And I reviewed that on my last video. If you guys want to look at those longer term targets, you can watch the prior video. But it just, again, looking at the weekly, it is very, very, very difficult to ignore the confluence between, even on the weekly volume profile here, and of course the potential descending triangle that we're looking at. The weekly volume profile, the daily volume profile, both suggest that this is very likely an accurate way to draw this. Now we'll have to wait and see, but that's what it's suggesting as of now. Now zooming back into the daily, looking to the downside. To the downside, if we do get, and I'm going to zoom actually into the 4-hour. To the downside, if we do get a 4-hour open and close back below 9,950, again, I will be looking for a move down to 9,400. If 9,000, now it doesn't necessarily mean 9,400 is going to break this time. We'll have to wait and see how it plays out. However, if we do get a 4-hour open and close below 9,400, that's when that target of between 89 and 8,500. That's when I'm going to be looking for a very quick drop between, again, 89 and 8,500. And I do have a decent amount of buy orders sitting down here. Certainly not going to try to break the bank, as I discussed on my last video. About 20% of the money that I have set aside to buy Bitcoin is banking on a potential bear trap where price drops down here and reverses course around 85 to 8,900, knowing that I call that a bear trap because if you've missed my prior videos, knowing that a measured move off of this, it would bring us down to about 7,000. And I do think if we do decisively break below 9,400, most people are going to be looking for that measured move down to about 7,000, which is why I think a bear trap around reversing at between 89 and 8,500 is a very, very real possibility. Certainly doesn't mean it has to happen, and if we do break below that, I will have money set aside to take advantage of the lower prices. But in my opinion, I do think that it's worth the risk to look for a potential bear trap and to potentially put in some buy orders down here between 89 and 8,500. But again, not financial advice, not a financial advisor. All right, checking our moving averages, exponential moving averages, guys. Looking at the 4-hour chart, we can see that price is coming up, finding some resistance right around the 50 simple and the 200 simple. We did have that death cross where the 50 simple crossed above the 200 simple back on September the 10th, so 2 days ago, and we are seeing some rejection right around that area now. So not, as of yet, haven't had that follow through. We'll have to wait and see kind of how this ends up playing out. Potentially, we could see that, but we are finding again a lot of resistance. The 200 simple and the 50 simple, as well as the upper Bollinger Band here on the 4-hour chart, is a lot of confluence between there. In other words, there's a lot of resistance sitting right there, and we can also see there's a lot of visual resistance that is also sitting right there. So this is why I think this is a very, very important area. If we can get above this area, there'd be some decent blue sky up to about, at least 10,500 to 10,650, somewhere in that area. But it's not going to be any small feat to get above this area. All right, let's check the daily. Looking at the daily, just as we discussed last time, guys, we are seeing the 821 and 55-day EMA all converging on top of each other here, guys. Very, very squeezed very, very tight. And we're also seeing the Bollinger Bands, daily Bollinger Bands, also bottlenecking. This is the kind of thing that you see before you see a much, much, much larger move. And I realize we've been saying that for quite some time because we've been seeing these Bollinger Bands start to converge basically ever since the end of July, but not like this. Again, as I discussed last time, we haven't seen the 821 and 55-day EMA converge like this since since April the 2nd, when we had this breakout that basically brought us all the way up to $14,000. So it doesn't mean it has to break to the upside. It just means it suggests a much, much, much larger move to come. Anytime you see the 821 and 55-day EMA that converge, that consolidated on top of one another with the Bollinger Bands also constricting or bottlenecking like that. All right, let's quickly look at the weekly. Also, the weekly Bollinger Bands are starting to constrict here, are starting to bottleneck. We are seeing price, again, just continue to snake right around that 8-week EMA. So not much has changed there. 21-week EMA should provide some resistance, or excuse me, some support if price does break down. That would come in right around 9,100, 9,200. So again, that's also a potential area for a reversal. Doesn't mean it has to happen, but certainly that's there. And visually, we can see a major area of potential support right around 9,000, where that $9,000 was acting as a major resistance back here from basically May the 27th all the way through June the 10th, and then that resistance flipped to support on the week of June the 17th, basically. Since bounced again on the week of July the 15th, the week of July the 22nd, and it hasn't reached down there quite yet, but certainly visually here, we can see that $9,000 area is a very, very real area of potential support if price does break down. All right, zooming back into the daily, let's check our indicators very quickly. Daily RSI trying to get back above that 59.2, or excuse me, 52.9, I should say. I guess I'm dyslexic this morning. 52.9 to 53, that area right there that we've been talking about, that in the past on the daily did act as, basically throughout the bear market, acted as resistance, turned to support during the bull market, and has seemed to be turning to potential resistance. Again, let's see if it can get back above it. If we can get back above this area, I do think that would bode very, very well for the bulls. We are approaching it now, so we rejected here in the past quite a few times. Let's see if we can get back above it. If we get back above that 52.9, 53 area on the RSI, I do think that would be a significant win for the bulls. Zooming in here to the 4-hour. 4-hour is... are we getting any divergence on the 4-hour? Not really. Actually showing some potential hidden bearish divergence, actually. Very, very small, but there nonetheless. Actually, if I draw it there to there, price obviously creating a lower high. Looking at price from the exact same point. Actually, let's draw it from here to here. Price created a higher high. Let's be a little more accurate here. There we go. Price created a higher high, so showing some potential, not confirmed yet, potential hidden bearish divergence, which would suggest a rejection, again, somewhere around 10,500, 10,600. So that actually would line up very nicely with our areas of that we were looking for a rejection. We'll have to wait and see how it plays out. And then looking at the looking at the MACD, also showing that a little bit further back, but we can see that histogram creating a higher high. If we look at the exact same point here on price created a lower high. So again, overall in a downtrend, looking at the upside, that's hidden divergence, in this case hidden bearish divergence, which would suggest, again, a rejection somewhere around that $10,500, $10,600 area. But again, none of that is confirmed as of right now. We'd need to see actually a daily candle top out here, and then another daily candle engulf that before that would be confirmed. So we'll have to wait and see how that plays out. But it is suggesting that. In other words, even if price is to continue up here, it does have its work cut out for it before we can actually declare a breakout to the upside. So this is just very, very, very much a a nice little bullish move on the very smaller time frames, as we discussed last time. But as far as the larger time frames, nothing really has changed. Switching out to the weekly RSI. Weekly RSI just basically sitting sideways here. You very rarely see anything like this, guys. This is interesting. It's just basically sitting sideways here, showing a little bit of strength. The fact that it can hold this zone here, showing some decent strength. It's not until, and I know I've discussed this last time, but it's not until price breaks down below that 52.9 area, 53 to 52.9 area on the weekly RSI, and that also was a relevant zone on the daily. Also the same relevant zone on the weekly RSI. If it does break down below that, that's when I start to get very concerned. But as long as we remain above that, it does tell me that, it does remind me, I should say, that, zooming out here, we are and have been for the last 9 months in an overall uptrend. So until that trend is broken, as they say, trend is your friend. So let's wait and see if that trend can continue. We are in a descending triangle, which as we've discussed, a descending triangle does have the probability of breaking to the downside. But the fact that it's coming off of a total uptrend here, that probability of breaking down is significantly less than if we were looking at a descending triangle and an overall downtrend. So this does suggest that this thing does have a decent probability, again, about a 45% chance of breaking to the upside, and those are decent odds. All right, so to wrap this thing up in a bow, guys, back to the 4 hour. Overall, larger time frames. We are still consolidating within a descending triangle, whether or not it's the descending triangle that I have drawn here or one that goes a little bit further out. We have yet to see, and I do think that we will find out over the coming days here. In the short term here, how am I playing this? I told you I've already gotten out, so I'm basically out. Other than, of course, my long-term hold portfolio, I'm basically out and just waiting to see how price does react at its current price point. Again, this is not the time to get greedy, guys. This is the time to say take very, very small scalp trades, take the win and get out. If price does continue up, that's fine. I took my profit down here, and just because I didn't catch it all the way up here and catch the top, I certainly didn't lose any money. I actually made some money, and that's a win in my book every single day. So how am I playing this, guys? As I said, I'm just waiting to see how the price plays out at its current price point. I do think, again, a measured move could bring this thing up to about 10,600 to 10,650, and we'll have to wait and see how it plays out. Conversely, if this thing does reject right here, guys, I'll be watching that $9,950 zone once more. 9,950 does break. I do think that's going to be your signal, decisively, I should say. Let me be very clear. A 4-hour open and close below 9,950, I will think will bring us down to 9,400. That would be a decent scalp if you're looking to short, and you see that would be a decent scalp in my opinion. Again, not financial advice, but that would be a decent sell signal targeting about 9,400. And as always, I would get out fairly early, probably around 9,000, 9,550, 9,500. That'd be where I'd be looking to get out. I would not want to target all the way down to 400 because that's what everybody is going to be doing. So that's basically it, guys. I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comments section below. As always, would appreciate an upvote. If you have enjoyed this content, please remember to like, subscribe, hit that notification bell in the bottom right-hand corner. Till next time, guys, please trade safe. Take care of yourselves. This is Workin, signing out.